I wish I knew this when I started. Trading is easy. You just need a system and a strategy that works for you. Hey, I'm Rob, for those of you who don't know me, and for those of you who do know me, I'm still Rob, and it's Coffee with Rob. Today, I'm going to take you to the charts. And I'm going to show you guys a system that will give you a high probability trade. And then, after the charts, I'm going to take you and show you a strategy that will make you money in the markets. I don't have any predictive capabilities. I don't have a crystal ball. I can't predict the future, and I can't tell you what's going to happen next. But what I do have is a system and a strategy that I've used for the last 30 years, and in all likelihood and all high probability, it'll most likely work for you as well. So if you're crazy enough to come along on the journey and risk your money in the markets and take that chance to become that little bit better and take that one step forward in trading, then come and join me as I show you how our system works. I'm going to show you a system that we use to trade in the markets. A simple price action system. Don't forget, most traders lose money, and if you're unsure, you probably shouldn't even be trading. On 5-minute trading, in fact, 99% of traders lose money, and on swing trading and position trading, 4 hours, 1 hour, day trading, about 60 to 80% of traders lose money. So do keep that in mind. So if you're crazy enough to come along on this journey, then come along with me and let's go and have a look at what we can do to make your journey a little bit easier and the best way to trade. Now, there are many systems in the market, and guess what? Every single system known to mankind in the market actually works. They all work. Every system works. You'd be surprised to find that out. What I find the easiest is using price action, which is basically support and resistance and trend lines. In other words, I don't have any indicators at the bottom. I don't have indicators lying around on my charts. I don't use moving averages. I don't use Fibonacci's. I don't use Bollinger Bands or any of those insane things that keep you busy in the markets. All I use is simple price action. I do know how to use all those different things, and I do have videos for you if you want to learn how to use these products. And I have been known to take a fib and have a look at a product, or I have been known to put an MACD on just to confirm my trade if I'm a little bit unsure of what I'm doing. So for example, if I was to use a Fibonacci on this particular trade, it would simply be there and it would tell me that we're heading into the golden area around the 50 to 61%. And it might actually be a good trade, and it's in confluence with my own system. On this particular trade, what do? We take our levels. We trade on the 4-hour, firstly. Let me not confuse you. We trade on the 4-hour charts. We don't trade 5 minutes. We don't trade 15 minutes. Those, you will lose money. 90%, 99% of traders lose money. If you think you're getting started and trading on 5-minute charts, just be prepared to blow your account or lose your money. If you want to get started in trading and you want to learn how to trade, a good way to start is actually with investing and going into shares. If you want to learn how to actually trade, then you want to be in Forex and you want to be in indexes and you want to be in commodities. Don't just trade one product, trade them all. The system will help you to trade them all. What we have here, this is the US dollar, euro US dollar as we stand at the moment when I'm making this video. And what we do is we take the charts to the day chart. We take it to the day chart. Why do I take to the day chart to get my levels? Because the day chart gives far more reliable information on each individual candle and each individual close than a 5-minute chart. So think of it this way. If you were to go into a room and put 5 people in there and say, check out this system for me and come back and tell me what you think of it. And 3 of them come back and say to you, that's an excellent system. Now you go and start your $1 billion company on that. Whereas you put 1,000 people in a large room and tell them to come back and check the system for you, 800 people come back and tell you it's good, you might actually start your company based on that information. It's a larger amount of people, so you've got a larger sample size, so you've got better information out of it. Whereas on the smaller one, you've got less information, and that's kind of what your 5-minute charts give you. So if you're trading on 5 minutes, you're trading on 5 minutes. You're trading on 4 hours, you're trading on 4 hours. Now, I like to trade 4 hours because I can take my trade, I can walk away, and I can leave it there, and I don't have to worry about it. I can position the trade, come back, and see how it's gone. It either works or it doesn't work. Now, there's a lot of these trades that won't work, and there's a lot of these trades that will work. But here's the basis of the whole system. So what we have here, euro, US dollar. What I'll do is I'll take it to the line chart on the day as well. Now, we had a resistance level here that it broke through. So now we go to our next resistance level, which is a little bit higher up on the level. So I'm going to draw it in with a rectangle. Now, why do I use a rectangle and not a line? Well, what our job is in the market is to look for liquidity. So what we're effectively looking for is where the orders are, where people leave the money. And how do we know that? Well, every time the price gets to that level, it comes back. Every time the price comes to that level, it comes back. Every time the price comes to that level, it comes back. That means that somewhere in that area, there's a whole lot of orders and there's a whole lot of money. Is it a straight line? No, because it's human beings. Human beings are creatures of habit. So they're all leaving their orders there, and that's all you're looking for. You're looking for the money that's lying in those areas so that you can pick it off. What's actually happened here is the price has gone up, hit this previous resistance, gone down, gone back up, broken through that area, and now it's created a new area because it's broken to the upside. Now what we're waiting for is a bit of a retest, and we can go long again within that area. Now there's three ways that we trade. The one way is we trade with the trend. The other way is we trade in a range, in other words, between these two lines if it stays in there. Or we counter trade, in other words, it breaks out of that trend, goes to the other side like it has here, breaks structure, goes up, then we start trading against the structure or out of the structure. It's called counter trading. Now, I'll show you that in a second. Let me just first, now we've taken our levels, so we've got our new resistance level in. We've got this, which is now a support level. These levels no longer matter because that is now gone. That is now over, and it is no more. And this level also no longer matters. Now what we're looking for is where do we take the trade? We take it back to the 4-hour chart. Now we've got our chart on a 4-hour. We just want to have a look here. Is there anything here which says to us we can't take the trade on the 4-hour? What I see here is a range now. It's broken through here. It's broken into this area. Now, when something breaks into an area like this, what we're looking at is the possibility that this is now starting to trade in a range. You see it goes up, goes there, you go short, goes there, goes long, goes there, goes short, goes there, goes long. That's a range. So is it going to stay in this range? Or has it now broken through here, come back to retest and going up? So in other words, what it'll do is it's broken through, it's come back, it's retesting, and it's going to go back up again. Something like that. That's what we're wondering. We're wondering if it's going to do that. Or is it going to break back to the downside? Another possibility. It breaks back to the downside, comes back, retests, and carries on going back down again. That's also a possibility with this particular trade. What we do, take it back to the candles. And the reason we use the candles is just so that you can see that's a green candle going up. That's a break to the upside. We know it's green, so we know it's positive. That's a red candle going down. We know there's a lot of sellers, so we know it's going down. The tails tell you that the sellers are getting back into the market or the buyers are getting back into the market. You can determine if you can download candle patterns from Google and just have a look at which candles mean what, and it'll help you a hell of a lot. So here we have two spikes down, and those tails are telling you that all the sellers got back into the market, and there's a pincer top. So that tells you that this is breaking to the downside again. There's your three crows going up, and then a big long red candle. Down she comes all the way back down to what is now support and was resistance because it broke through this level, comes back, retests this level. At the retest, you get a green candle going to the upside, you buy it, and it goes up. Vice versa, if you were to buy this, I'm just going to draw this trend line in, just so that you can see it. Normally I would draw on a line chart, but it really isn't that serious. The trend, all I do with the trend is I draw it on the time frame that I'm trading on, and I have a look and I say, here's a trend resistance. It breaks through that trend resistance, gives me a green candle to the upside. That should tell me that the trend to the downside is now broken, and it's now going long, and now we can buy. Vice versa, if it comes down, so if we take this trend line and we draw it from this level here, we say we're drawing this up here, if it breaks through that, it's going short. This is very short term, and you can use it just to give yourself an idea of which way things are changing. So this is going short into the support. It'll probably bounce out of here, go long and go back up because this is most likely a retest. So the three ways that we trade: in a range, or we trade in the trend. The trend is trend is your friend. So if it goes up, comes back, hits a line, goes up, comes back, hits a line, then you keep on buying all the way up. So let me draw this line in here so you can see it. So if you take this line and you draw it all the way up here, you say that's your trend support, right? So every time it goes up, it comes down, you buy it, comes up, down, you buy it, it goes up, comes down, you buy it, goes up, breaks through. That's a counter trade. This has now gone short. It's broken through the trend. Now you're going short. It's going the other way. And then what did we say now? It broke back to the upside here. We're going long and we're just going up with the trade. So if you're trading on the trend line, that's all you do. If you're using the support and resistance, the straight ones, all you do is you wait for the green candles to come out to go up and the red candles to come out to go short. You get a red candle coming through here going down, you just go short. See, red candle short, green candle long. Easy. It's not rocket science, guys. It's just a question of, see at the bottom here, we would have had a level. Every time the green candle come out, we would have bought it long and we would have gone long with that particular trade. And that's as simple as this trading method gets. Not complicated, not easy, not difficult, not rocket science. Now, the Brent crude oil trade, for example, here, there's what was a support. It's broken through that support, so now it's going down. It's going to come back, retest that, more short, goes back down short, keeps on going. US 500 was very short here. It was trending down, trended all the way down, bounced up, hit that resistance, back down, bounced up, hit that resistance, bounced down. It's broken through the support now. Now that's a red candle. You can go short on this, but if it comes back, retests, all the better, and then you can take the short all the way to the downside. Sell it down. I'm waiting on this one for a nice long trade. So what I wait for here is for a level further down where it will bounce up and give me the long trade to the upside, because I just feel on the S&P 500 that it's inherently a long trade, always a long trade, no matter what you do. Okay, so that is how you trade the system. All the system is, guys, is a high probability trade. It's not going to give you the win. A win rate doesn't make you money in the market. Go and listen to the strategy. The strategy is what's going to make you the money at the end of the day. Now that you've seen the trading system, now that you know how the trading system works and the high probability trades, let's go and talk strategy. Let's have a little chat about the strategy that's going to make you the money in the markets. Because the one thing that you have to understand in the markets is that the markets are more subjective than you would ever believe. They're not about maths. They're not about algorithms, and they're not about squiggly lines and candles. They're about human beings that are trading in the markets. If you go and start a business, you're not going to learn how to run that business in a week. If you go and get a job as a doctor or a lawyer, you're going to have to study for that, do an internship, do an apprenticeship, whatever the case, to become that specific type of person in that trade or become proficient at it. Yet when you get into trading, you somehow think you're going to be proficient at this game in a day, and it's not a game. It's a career. It's a real career that you have to learn over time. You have to learn it over a period of time. So you cannot do this in one day. So many people telling you that you can turn $200 into $1 million in a week. It's just not going to happen, guys. Showing you all the Lamborghinis and all the fancy cars, not going to happen. And if you don't have a business plan and you don't have a strategy, you don't have a chance. When you want to start trading, the first thing you have to do is work out your plan. And the reason is, imagine if you were going to go and start a shop down the road, in the mall, in the high street, maybe a factory down in the industrial area, and you have no plan. You just build a factory and you start making things, or you just open a shop and you start selling things. Would that work? Would you invest your millions in that? Probably not. Most likely, you'd be thinking, perhaps it'll be better off if I was to have a business plan and work out, firstly, what I'm going to sell, who I'm going to sell it to, how much I'm going to sell it for, how much I'm going to pay for it, how many shelves am I going to need, am I going to need point of sale, am I going to need stock, all these things you need for a business plan. And then you're going to need investors or a bank loan or something to get it going, or a large sum of money, Maybe you're wealthy. I don't know. But when you start trading, all of that goes out the window. Suddenly that doesn't matter and it's not important. Yet, you want to make money. How many people have asked me, Rob, can I make money on this journey? Yeah, of course you can. If you have the right amount of investment. But if you don't have the right amount of investment and you need an investor, or you need a loan, or you need money to invest with that you don't have, and you want to get started, and your plan is like, well, I need to get some money somewhere so I can do this trading thing, then get yourself a funded trader account. I've got links in the description below for you. You can go and get it. It's not a sponsored thing or anything, guys. It's just an affiliate link, and you can go and get a funded trader account. Pay $100 or $200 for it if you can afford that, and you can get a $25,000 to $50,000, maybe $100,000 account. You can get instant accounts. You don't even have to do challenges anymore. Then when you make a small profit, take the money out, don't leave it there. I mean, nobody trusts prop firms or funded trader accounts. Just take the money out and use it. That'll work. That works just as well as anything else. I was adverse to all these funded accounts and prop firms for a very long time. But it's a great way to get started if you're starting out. If you're a beginner and you want to get involved in trading, if you happen to lose that account, how much do you stand to lose? You stand to lose the amount you paid for the account. You don't stand to lose the $100,000 that you've put in a cash account. It's a great way to get started, guys, because demo accounts are great for learning, but the trouble with demo accounts is they're so easy to trade because you're not trading with money. A funded account is one step up from that because you're invested in it, you've got something to lose, and it gives you a better concept of, I want to win something, I want to have this account, I want to make some money. So you'll have more care on the account, let's say, and it'll teach you the psychology, because at the end of the day, what you have to learn in trading more than anything else, more than the systems, more than anything else, is the psychology of trading. How to get around trading, how to manage your fear, how to manage your FOMO, how to manage your greed, how to sit in your hands and be patient, how to take your profits when they're meant to be taken and stop taking them too early, how to not revenge trade. There's a whole bunch of things that you need to get through before you can become a proficient trader. So I'm going to give you a strategy here. I'm going to give you a strategy now that will get you on the road, and get you started with trading. And the strategy is this. If you have, and it doesn't matter if it's a funded account or if it's real cash or whatever it is, I'm just going to use round figures so that you can understand what we're talking about. If you have a $25,000 account, and I'm using $25,000 because it's more realistic than $100,000. More people have maybe got that amount available to them. Maybe more people can have that kind of size of funded account. And then what I do is I say, all right, we're going to risk 1% on every single account. Every account, 1%, that's all. So $250 per trade. And then you can take 10 trades and you only lose 10% of your account, which is in all likelihood recoverable. You shouldn't lose 10 trades in a row, but it does happen, and it could happen. You could win 10 in a row, which would be absolutely marvelous, wouldn't it? It'd be great. Win 10 in a row. Yeah, I think that I could do that. Now, how do I risk $250 per trade? How do I do this? How do I get involved in this? I showed you on the charts, and I'm just going to tell you how I get. So what you do is you go on and you look at the trade you want to take. You're on that trade that you want to take. You decide where you want to put your stop loss. So I want to put my stop loss in that area. And then you work out from that area back to the cost, how much is $250? How big can my trade be? 0.2 lots, 1 lot, 1 pair, 1 point, whatever you're trading in. Now you've worked out the size of your trade. Now all you have to do, very simply, is say, now where's my take profit going to be? And at least make the take profit more than the loss. Because what's the point of targeting a profit of $50, risking $250? Because that's not what you want to do. You want to make more on your wins and lose less on your losses. So you want to be targeting $300, $400, $500 profits. So if that's a viable thing and it's possible, then you've got a trade, and there's your trade. When the profit goes up into cost, you simply move your trailing stop up into break even, maybe even a slight profit, and let it follow your trade up. When it gets to take profit, you take your stop loss, you move it right up behind the profit, right up behind it, If it comes back and takes it out, you're not unhappy. And if it doesn't, keeps on going and it makes you much more money. That's what you want, isn't it? That's what we all want. That's what we're all looking for. We're looking for that extra little bit of profit. If you've started out and it's your first trading game, you might find it a little bit difficult to follow your trades up. You might find it really difficult when the trade goes into profit and it goes a little bit green and there's $50 there, not to click the button and take the profit. This is going to be one of your biggest difficulties psychologically. Even more difficult than when it goes into loss. And when it goes into loss as a beginner, you're probably going to sweat a lot, even if it's only a couple of dollars, because you're not used to losing money. You have to get over that and you have to start as light as possible. So what I always say to people is don't go in with the highest possible risk that you could ever believe. Go in with a risk that you are comfortable with. So if you're not comfortable trading $250, trade $125 to start with. See how that feels. Can you sleep at night? Are you comfortable with the losses? Because when it goes into loss, the first thing that people learn to do is they learn to move the stop loss away. Why would you do that? It was an invalidation area, an area where you know that that trade's no longer valid. So you don't want to move your stop loss away. The other thing that people immediately start learning to do is taking dollar cost averages. In other words, I'm in a loss. If I double up on this, I'll get the money back. Don't do that. Really bad idea. It's just going to cost you a lot more money. Do not dollar cost average. Do not move your stop loss. When it goes into profit, sit on your hands or break your fingers or do something so that you can't trade out immediately. Follow it up with a trailing stop and then just take the profits as they come. If it takes your trailing stop out in profit, you haven't lost anything and you probably would have taken that profit on a scalp anyway, so no big deal. 5-minute trades, 99% of traders lose money. Position trading and swing trading on the 4-hour and daily charts, just remember 60 to 80% of traders lose money there as well. It's not easy for people, it's not simple, and it's not straightforward. Don't think that you're just going to make money in the markets. It's not that easy. Guys, if you want to know more about my strategies, and you want to know more about all the other different systems that you can use in trading, because every single system works. Did I tell you that? Every single system works because every genius has backtested every system. It's not the system that makes you money, it's the strategy. The strategy that we've just talked about now, the simple risk management strategy. That's what'll make you money in the markets. Learn to lose and you'll become a good winner. You want to make more on your wins and lose less on your losses. As I always tell you guys, if you take 10 trades, high probability is you'll win 5 and you'll lose 5. But what you want to do is you want to make twice as much on the wins as you lose on the losses. Lose 1 for every 5 that you lose, win 2 for every 5 that you win. Simple really, not difficult, not complicated. Guys, watch my last videos. Don't forget to like, comment and subscribe, and I'll chat to you really soon in the near future. Don't forget to come and join us for the live shows for more great information, and I'll see you soon. Thanks for watching. Cheers, ciao, and bye.